Right, next I want to talk about swing trading. Okay, swing trading is essentially a bit like buying the rumor, selling the news. But this is the term for it, swing trading. Okay, so swing trading on a short term basis is basically trading a coin's price swings for gain. So let's say there's a rumor that something's going to happen with a coin in 2 weeks' time. Across those 2 weeks, there's going to be some swings in the price. It's going to go up, it's going to go down, it's going to go up, it's going to go down. Towards the actual date, it really goes up, and then it goes down on the date, okay, on the date of the actual news. Now, during the price swing, so it's going up and down, you can essentially trade the same coin, and you can trade the price swings and make profits every time. Okay, so if it goes up a little bit, 5%, you trade it. Okay, and then it dumps, you make a profit again on the rise, 5%, it goes down. You can do that on the same coin and multiple coins. And on a short-term basis, this is exactly how to do swing trading. It's a bit like buying the rumor, selling the news, but this is more of a day-to-day kind of thing. This is more of taking a very, very short-term position and just getting incremental gains trading the same coin. On a long-term basis, what people use swing trading for is to actually sell at a high and then when it dumps, buy a whole load back, so increasing their position. So let's say I've got 200,000 of a coin, it goes up to $1, that means I've got $200,000. Now, if I see that that's at an all-time high, I can sell my large amount of coins in that cryptocurrency, and then it will go down to, let's say, 85 cents. Now, with that $200,000, I can buy a hell of a lot more back, so that when it goes up to $1 again, I make even more money. Okay, so that's how people do it on a long-term basis to actually increase their position. Let's say they bought 20,000 at ICO, and then the price really spiked, and they're thinking, God, I wish I'd bought 100,000. So what they do is they dump it, they dump their coins, they sell at a high so that they've made a profit. And then with the profits, they can buy back a lot more for less money. Okay, so that's how it works on a long-term basis. And typically what this involves is there's another way of doing swing trading, which is buying when something is oversold and selling when it's overbought. This is much easier to do. So I'm going to be showing you RSI, which is Relative Strength Index, in the technical analysis section. And this shows you essentially when a coin is oversold. That means people have just been selling it too much. They've really dumped it. They've dumped it really to the bottom. You buy at the bottom and then it goes back up and then it gets overbought because it's gone right to the bottom. All of a sudden, people get really interested because there's a lot of traders that use RSI. They see it's oversold. They buy a load of it. It suddenly gets overbought because speculative buyers enter in, long-term investors enter in, and then it gets overbought and then they sell. That's another way of doing swing trading. But this is more of a longer-term position because it can take sometimes days or weeks for it to go from oversold to overbought. So swing trading can be a day thing. It can be a few days or weeks. Okay. Now, this is how a lot of traders make their full-time income because a lot of them are whales. A lot of them have built up a load of, Bitcoin over the time that cryptocurrency has existed. They got in there early. And then what they do is they use these Bitcoins to deposit large amounts in a cryptocurrency. It makes a little spike. They've made a huge profit out of that. Even if it's 5 to 10%, if you're putting in a lot of money, you make a lot out of it. And so traders can make a full-time income on these pump and dumps, on this swing trading. And again, these can be organized. So these can be pump and dump groups. Okay, so essentially they pump it and they trade on the swing and they essentially just make gains. So this is another way in which swing trading works. So swing trading is essentially capturing the gains on a coin because the price is swinging for whatever reason, whether it's a pump and dump movement or because there's actual news coming out about it in the future, and the price typically goes up and down, all the way in the lead up to the news. Sometimes it's just a smooth trajectory up, but often people get weak. They are weak hands, as is called in cryptocurrency. They sell out much sooner than they were going to because they just want to make a small gain. So that is how you can make money with swing trading.